Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Yum's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 40 billion market cap. They're trading at 142 a share and they have 282 million shares outstanding. Yum owns several fast food chains. They operate KFC, Pizza Hut, Taco Bell, and the Habit Burger Grill. However, they do not operate these locations in China. A separate company owns them, Yum China. That ticker is YUMC. This ticker is Yum. The company previously owned Long John Silver's and A&W Restaurants. They were created as a spin-off of PepsiCo in 1997. You'd be shocked how many businesses Pepsi's involved in. They don't just sell soda. They have a lot of brands beneath their umbrella. Let's take a look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow is in a pretty tight range, between 1.1 and 1.5 billion a year. Their margins are around 20%. That means they convert about 20% of their revenue into free cash flow. In 2023, it's 19%. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's highest in 2023 at 1.6 billion. And they had a net profit margin of 23%. Revenue is a sales for the company, and that goes up each year from 5.7 billion to 7.1 billion. Although the growth is pretty low, only 3% in 2023, 4% in 2022. They did have a nice growth in 2021, 16%. They pay a dividend of close to 2%, and if you take 2% of their market cap, that's $756 million. That's their annual dividend payments, which looks like they can afford because it's a good amount lower than their free cash flow. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 38 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $33 billion. We divide that by 282 million shares. And we get a calculated stock price of 116. They're trading at 142, so they're trading at a 22% premium. It's a sell according to the model. There are 60 companies in the same industry as Yum, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't spend much in CapEx, only 300 million, a lot less than McDonald's and Starbucks. We can't look at their debt to equity ratio. They have negative equity. That means their liabilities are higher than their assets. They pay a 2% dividend, which is higher than the average, lower than 1 and 2. Chipotle does not pay a dividend. Chipotle is going to do their 50-for-1 stock split soon, the biggest stock split ever. Yum generates 1.3 billion of free cash flow, much higher than the median average. They rank 4th in market cap, half of Chipotle, 1/5 of McDonald's. We can't look at their price to book. They have negative equity. They're trading at 25 times earnings, which is a little worse than the median. They're trading at 30 times free cash flow, between the median and average, and they're trading at 6 times revenue, a lot worse than median average. They generate 7 billion of revenue, which is lower than their Chinese arm. They generate 11 billion. And their 5-year annual revenue growth rate does not look so great, only 4%. Look at Luck and Coffee, 96%. That stock seems really overvalued. They're trading at over 300 times free cash flow. Bloomin' Brands seems like the best value, 11 times free cash flow, 9.5 times earnings. If you put $10,000 into this company 10 years ago and reinvested the dividends back into the company, you'd have $31,000 today. That's a 12% annual return, a 208% total return. So it looks like the stock has performed really well, at least in the past 7 years. It looks like it struggled from 2014 to 2017, but then it's done really well since then. They're going to release their first quarter earnings on May 1st, next week. So let's go through their 10K. We'll start with their income statement. This is 2021, 2022, and 2023. Revenue goes up a little each year at 7.1 billion. Company sales 2.1 billion. They do own some locations. It's not all franchised out. Franchise and property revenue is 3.2 billion. They own some of the properties the franchisees work out of, so they lease the space back to the franchisee. That's what property revenue is. Franchise contributions for advertising and other services, $1.7 billion. Franchisees usually pay a royalty, like 8% of gross revenue. So that royalty is part of franchise. And then most franchises pay a marketing fee, say 2% of gross revenue. That's part of advertising. When I owned my mathnasium, we had to pay 10% royalty plus 2% marketing. So it was like a 12% royalty. They just break it out, but it's the same thing to us, the franchisee. Here's a breakout by store. KFC revenue, $2.8 billion. That's down from 2022. Taco Bell, that's up. That's $2.6 billion. Pizza Hut, $1 billion. That's down from 2021. Habit Burger, that's up. Almost $600 million. And they're losing money in Habit Burger. They're losing $14 million. They make the most money in KFC, $1.3 billion. KFC revenue isn't that much more than Taco Bell, but their profit is a lot more. And Pizza Hut margins look okay, about 40%. If KFC had $1.4 billion of operating profit, which is half of $2.8 billion, their margins would be 50%. They're $1.3 billion, so their margins are about 46% maybe. Taco Bell's margins are a little under 40% because 4 times 26 is 80 plus 24 is 104. They're at 94. So a little under 40%, maybe like 37% margins. Here's another breakdown of the revenue. It looks like they own a lot of Taco Bells because company sales is a little over $1 billion. They don't have that many KFCs in the US, a lot more outside the US. Habit Burger is all US. Company sales, $575 million. Let's go back to the income statement. Let's look at their expenses. Restaurant expenses, $1.8 billion. G&A, $1.2 billion. Franchise advertising, $1.7 billion. Because they spend a lot of money to get new franchisees. That's how they make money when people buy a franchise. Total expenses, $4.8 billion. Operating profit, $2.3 billion. Net profit, $1.6 billion. Similar to 2021. EPS, $5.68. That is a good amount higher than 2021, so it looks like they're buying back stock. And dividends per share, $2.42. They're paying the highest dividend. Let's take a look at their balance sheet. Current assets, $1.6 billion. Current liabilities, $1.3 billion. So the current ratio is above 1. Current ratio is current assets over current liabilities. Current assets are assets you can liquidate into cash within 1 year. The most liquid asset is cash. That's the definition of liquid. They have $500 million of cash. The second most liquid is accounts receivables. This is how much money other companies owe them when they sell on credit, $700 million. Prepaid expenses, $360 million. This is when a company makes an advance payment for a product or service they're going to receive in the future. Here's a breakdown of their prepaid expenses. Restricted cash, $177 million. Other, $159 million. Then you have PP&E, $1.2 billion. Here's a breakdown of the PP&E. $400 million of land, $1.4 billion of buildings, and $700 machinery. The gross value of the PP&E is $2.5 billion. They depreciated $1.3 billion, so the book value is $1.2 billion. $640 million of goodwill. This is from acquisitions. Here's a breakdown of the goodwill. $226 million KFC, $98 million Taco Bell, Pizza Hut $250 million, and Habit $66 million. So when KFC acquires another company, the goodwill goes into this bucket. So total assets $6.2 billion, up from $5.8 billion. Total liabilities $14 billion. That's down from $14.7 billion. Their biggest liability is long-term debt, $11.1 billion. Here's a breakdown of the long-term debt. $3.7 billion of securitized notes. $700 million from Term A loan facility. If you want to get the details on this loan, you could definitely find it in this statement. And then $1.5 billion from Term B loan facility. Yum senior unsecured notes is $4.5 billion. Here's the interest rate and the maturity dates on some of the debt. It looks like they pay between 2 and 5% interest. Assets minus liabilities equals equity. They have negative equity, negative $8 billion. They lost $7.6 billion from running their business. Let's take a look at the statement of cash flows. The first section is operating cash flow. They generated $1.6 billion in 2023, a little less than 2021, $1.7 billion. That's how much cash a company generates from its operational business. In the investing section, they spent $285 million on CapEx spend. They sold KFC Russia, received $121 million. It looks like they owned a bunch of restaurants and then refranchised them. They received $60 million. And they paid down a bunch of debt. They also bought back stock, $50 million of stock. They paid $700 million of dividends. That's more than prior years. So in their financing section, they had a cash outflow of $1.4 billion. Here's some high level about the company. Yum has over 58,000 restaurants in more than 155 countries. So they cover most of the world. The whole world is 195 countries. 98% of the units are franchised. KFC is their biggest division, almost 30,000. I didn't realize KFC was so big. McDonald's is around 45,000. And McDonald's is the biggest company in the world in terms of units. Second biggest is Pizza Hut, 20,000. Taco Bell, 8,500. Habit is really small, 378. KFC is mostly international, 87% international in 149 countries. Taco Bell is only 14% international. Pizza Hut is 67% international. They own most of their Habit burgers. I think McDonald's is all franchised. I don't think they own any units. Maybe one or two. Starbucks is 100% company owned. They don't franchise any units. Starbucks is the biggest company in the world in terms of units. Because most big companies are franchised, like McDonald's, KFC, Dunkin' Donuts. It's hard to spend your own money to scale. It's a lot easier to scale by franchising out and letting others pay for all the infrastructure and build out. I live in Northern California, so Habit is pretty well known. They started in Santa Barbara in '69. I think it was started by two brothers, and they grew to around 7 locations, all fairly close to Santa Barbara. And those guys retired and sold their stores to the company that bought them. Let's look at them on Simply Wall Street. Its last price, $142, 40 billion market cap, up 2% in the past week, up 1% in the past year. Let's see what they say about the company. Yum develops, operates, and franchises quick service restaurants worldwide. They operate KFC, Taco Bell, Pizza Hut, and the Habit Burger. Their stores specialize in chicken, pizza, burgers, sandwiches, Mexican-style food, and a lot of other food products. They were known as Tricon Global Restaurants and changed their name to Yum in 2002. They were incorporated in 1997, headquartered in Louisville, Kentucky. They started trading back in '97, and the stock was as low as $6. It got up to $16.99. If you bought it at $16.99, you needed to wait 4 years to get back to $16, and that was in 2003. And then it ran up to $40 in 2008, came down to the low 20s in 2009, then a great run up over the next 6 years, hitting over 90 in 2015. Then it fell, came back up, fell, then came back up to over 100, over 110 in 2019. It looks like it fell to about 50 during the COVID lows. Its all-time high was mid-2023 at 142, but it's getting pretty close to that level right now. It's trading in the high 130s, low 140s. Simply Wall Street also thinks they're overvalued. Their price is 98, 44% overvalued. 24 analysts priced this stock at $145. Their revenue forecast for 2024 is $7.8 billion, 2025 $8.3 billion, 2026 $8.9 billion. And their free cash flow forecast for 2024 is $1.6 billion, 2025 $1.9 billion, 2026 $1.8 billion. Their revenue was really high in 2013, $13 billion. It got really low in 2016, $1.8 billion. Then it came up to $6 billion, and it's been fairly steady since then, currently at $7.1 billion. Their debt and equity were pretty similar in 2013. Their debt has come up a lot while their equity has come down a lot. Now their equity is negative $8 billion, debt $11 billion. And this green line is their cash. So they keep very little cash on their balance sheet. Here's their dividend yield since 2014. It was 2%. It peaked at 2.9% in 2016. The forecast for 2026 is 2.3%. The CEO's salary was $800,000 in 2017. It's currently $1.3 million. Total compensation $21 million. Tenure as CEO 4.3 years. In the past year, only one insider sell and no buys. 85% of the company is owned by institutions, 15% by the general public. The LA company Capital Research is the biggest shareholder at 11%. Then Vanguard, BlackRock, T. Rowe Price. Loomis, the Boston firm, owns 1.5%. Fidelity, 1%. Magellan, 0.9%. Invesco, TD Asset. Schwab. The UK company USS Investment Management owns 0.5%. Their employee count was over 500,000 in 2015. It's down to 35,000. This is when their company split their Chinese and non-Chinese divisions. That's also why their revenue went down, because this company we're looking at excludes all their Chinese operations. And the ticker trades in lots of places: New York Stock Exchange, Deutsche Börse, Zicha, London Stock Exchange, Swiss, Mexican Bolsa, Wiener Börse, Bulgaria, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.